Now, going back since 1950, the Santa Claus rally has produced gains 75% of the time. But our next guest says there may be some warning signs out there in the economy, specifically when it comes to the K-shaped economy, worries about affordability, and low consumer confidence. So how do you play this in the market? And is AI optimism too high? Let's discuss this with our floor show guest, Paul Dietrich, Chief Investment Strategist at Wedbush Securities. Great to have you here. Okay, is AI optimism too high?
Well, I think AI is magnificent. It's going to change the world and for ages to come. The big question is it valued too high at the moment? And I think that's probably the case. And I think we need the infrastructure. You can't have, just like you couldn't have railroads without rail lines, we need the infrastructure. But historically, people have lost money investing in infrastructure, going back to the Erie canals and electricity grids, and think about internet, the great infrastructure companies of Global Crossing and L3 and WorldCom. They're all bankrupt. We thank them for for
their
doing it.
Service.
Yeah, their lovely service. The investors lost money. And I think AI is, because AI data centers, they literally, they have to be kind of generic just by the very nature. So there's nothing really special about them, but we need them in order to make AI work. And there's trillions of dollars going to go into it. I think the way to play it, there's a better way to play it, and that is through utilities. I mean, people are investing in the real estate investment under these data centers. They're investing in the actual data centers, but every 3 to 5 years you have to buy new NVIDIA chips, you have to buy new equipment, but you got to pay for the electricity, which is you pay your electricity bills first. Yeah. And I think the way to do this is through utilities and investing in utilities. I was a state legislator for a while, a long time ago, and I was on the utilities committees and commissions. And the nice thing about utilities is that if you do everything right, all their cost, you get a 10% or more return on investment, and it's guaranteed by the state. So it used to be considered a kind of widows and orphans, almost quasi-bond alternative.
Right.
Now it's a growth stock because we know the amount of energy that it's going to take. This year, utilities, the utilities ETF, which I like, which is VPU, the Vanguard Utilities Fund, it's outperformed the S&P 500, and I think it will continue to outperform. And you got these guarantees. It's the safest way to invest in AI. You
are sounding similar to another research note I read, which said that we're moving on from the enablers, like the chip makers, to the applicators. Who's applying it? People have talked about utilities or financials. Is that sort of where you are as well, moving on from just the foundation, the chips, into now who's using it and applying all that new technology?
Yeah, Warren Buffett used to say that he was notorious for not wanting to invest early on in tech companies. And he said, I want to invest in the companies that use Microsoft and all of these companies and become more productive because of it. The exact same thing. However, historically, as I mentioned before, infrastructure in AI is a risky business.
Yeah.
And so here's a way to do it without any of the risk. And we have to have this infrastructure, just like electricity wouldn't have worked without having the grid system connecting everybody's home.
I want to switch gears here because in our opening, we talked about silver, and it is shocking. Silver, copper, gold have all been on a massive tear. You're talking about gold here, and I'm curious if this is a rate bet call, if it's an inflation call, if it's a central bank buying up demand issue. What is the case for gold?
The case for gold is all of those things.
Okay.
You have a Congress that is running up $2 trillion in deficits. every year, and it's expected for the next 10 years of deficit spending. We have an administration which has basically dropped the dollar, devalued the dollar by 7 to 10%. I think as of yesterday it was 7%. And so if you think about that, it may not be that gold's going up so much as that everything else is going down. Plus, investors are saying, because we have this deficit-addicted Congress, that we need higher yields for treasuries, because of the spending, and our risk is going up. All of these make the case for gold.
Okay.
And gold is up this year 72%. It's just wiped out, the NASDAQ, and it's such a safe investment.
It is. I want to talk about something else in the last minute that we have, healthcare stocks. Now, there's been a lot of frustration over the ACA subsidies because since that was enacted, shares of United Healthcare and all these big pharma companies are up. I mean, 1,300%, I think, was one statistic, and yet people feel like healthcare isn't affordable. The president did come out and say he wants HSAs because he doesn't like that all these healthcare companies have been making that much of a profit, that all the stock has gone up that much. Are you confident that healthcare is still a good play at this moment, given some of the political risk surrounding the issue?
Yeah, our healthcare system is a mess, as we all know. But you have to go back down to the fundamentals of healthcare. We have an aging population. We have healthcare costs are continuing to go up. They will continue to go up whether we have ACA subsidies or not, if we have a recession or not. People have to pay for health care before they pay anything else, their mortgages. It's going up. And so right now, if you look at the healthcare ETFs, the sector ETFs, they're just slightly behind the S&P 500 this year. But if we do have a crack in the economy, or if there is a correction, healthcare is going to be going up when everything else may be going down.
That was a wonderful cross-asset analysis. We covered a lot. Paul Dietrich, thank you so much for your time.
Thank you, Taylor.
Appreciate it.